Welcome back. You're watching our continuing coverage here from Davos 2026 at the World Economic Forum's annual summit. We've been bringing you global business leaders to present an outlook for 2026 on the most pressing issues. Joining me now is someone who is one of the most respected, influential voices in the world of finance. Jenny Johnson of Franklin Templeton, the global CEO, also, of course, a big supporter and a believer in the India story. Jenny, it's great to have you back here. Thanks very much for joining us on CNBC-TV18.
Thank you for having me.
Well, let's start about, with the global outlook for growth at this point in time. IMF pegging it at 3.2%, so it's pretty steady. And India, of course, 7.3 for this year and 6.4 for FY27 and FY28. On balance, with all the uncertainty and volatility and the tariff threats and so on and so forth, what do you make of where the global economy is and what that would mean then as far as markets go?
So first of all, I'm bullish on the U.S. I do think that President Trump, we have midterm elections coming in, and he is going to make sure that that economy stays strong through the midterms. So you have that tailwind. I also think, AI, and we haven't seen any real benefits yet from AI in the broader sectors, right? The investments have all been about the picks and shovels, the NVIDIAs, the Microsofts, others. That's just at the very beginning. People say, well, the energy next is going to be the next big investment. Yeah. But what's really going to be differential and meaningful is as companies start to leverage AI to improve their business. And so I'm bullish on that. India, of course, I mean, the big benefit, honestly, India has is it's very much a domestically driven economy, right? So you kind of, with all the geopolitical issues going on, India's kind of isolated. Yeah, tariffs affect you a little bit, but really the India story is all about your consumer. And I've been a fan of India. I lived in Hyderabad in 2005 with my family. My kids went to school there. My daughters managed to get into a Bollywood movie, so I've got the full
plenty of India connections. Did she enjoy that, by the way?
Oh, she loved it. Of course, she loved it. But it's a country where 56% of the population is under the age of 25. I tell people when I talk about the India story, and I say, you got to understand this is a British-based legal system, so it's a legal system that people understand. It's from an education system. I think Americans are surprised when I tell them that Harvard is a safety school to IITs. Unbelievable graduates that come out, engineering and others. So the India story is so powerful. There is a saying that India grows at night while the government sleeps. Yeah. But I think your current government has done a really good job of actually being supportive of growth in the environment. So I'm very bullish on India.
Well, it's 30 years for Franklin Templeton in India. So, what is the plan for Franklin in India in terms of assets under management and the kind of growth that you anticipate?
Well, actually, it's been... we launched 4 products. We had one of our best years ever in sales. We've had 8 consecutive quarters of positive sales. We actually launched one of the first private credit funds. So we're excited about that. And we have a license in Gift City. So we're going to take advantage of that. Our view is it's such a great dynamic market. We have clients in 160 countries. We have local asset management. We're sort of unique of a multinational manager that has local asset management. I think a lot of Indians look at Franklin Templeton as a local company. And it's because we spent the time, we brought the SIP to India.
My first SIP was Franklin Templeton.
There you go. And to give you an idea of how significant they are, SIPs, I think in the last 5 years have grown from something like 800 million a year, or it might even be a month, to 3.3 billion. I mean, in India, it's such a great story, and it's a great way to save. So we're very bullish, fixed income equities. We love the India story.
But what about fund flows? Because FIIs have kind of been reluctant in investing in India, especially in the last year or so. And we've seen FIIs pull money out of India. And FDI has had its own issues, but that's not just India specific, but it's also the global environment. What do you anticipate as far as fund flows are concerned?
Look, I think, so it depends if you're talking about external fund flows into India.
Yes.
I think that there were a couple things. I think some people thought maybe it got expensive, but you see a little bit of correction there. You still have pretty supportive monetary and fiscal policy. I think there's a lot of pro-growth initiatives that are going to be positive for the India story. It's the fastest growing economy of all the large economies. So those are amazing tailwinds. Now, sometimes, depending on the currency, the dollar has been weakened, and so it depended on sort of where you were investing from, whether or not you saw it as it was going to be positive or negative. But again, I look at it and say just fundamentally, the the demographics and the dynamics of India are such that it is a really attractive place. And that's why we wanted to set up a license in Gift City. We're going to tell the India story. We have a local asset management team, and to be able to attract the foreign
So what are you
dollars.
going to do from Gift City exactly?
Well, so we're building products that foreign investors will be interested in. It's a way to actually get access to the Indian market. So we are launching several different, some global equity products. You also can have investors send money out. So it allows us to take our broader suite of products and be able to offer them to Indian investors as well.
Well, you've come to Davos fresh off a crypto conference, Jenny. What's that world looking like?
So it's interesting. So Franklin Templeton has been very, I think, forward on tokenization, probably before most traditional asset managers. We actually started our journey probably in 2017. We had a tokenized money market fund approved by the SEC in 2020. It's one of the, I think it may be the only one that's natively on chain. Others are what are called digital twins, which means they're copied onto the blockchain. Well, if you're a digital twin, you don't get the benefit of the blockchain, which is we can run this. We actually calculate the yield every second in the money market fund. So if you're a hedge fund and you use this as collateral and you only own it for 4 hours, 22 minutes, and 32 seconds, you will actually get paid that yield. You will be able to transact within the next few weeks, be able to transact on a Saturday and move into a stable coin. Now, why do I love tokenization? It is simply a programming language that does some really cool things. So one is it has a record of who has ownership. Huge cost in financial services, reconciliation of your own data across your systems. Then you have to reconcile with your counterparty. It eliminates that. There's only one source of truth. It has the ability to to program a smart contract. So whatever types of investment agreement that we have, we can actually program that in. And then finally, it has a payment mechanism. So you're going to have atomic settlement. You're not going to have to wait to get for your money after your transaction settles. And my favorite example of that I think highlights what the opportunities are is Rihanna. It didn't really work, but it still gives you, I think, insight in what is coming. So Rihanna created NFTs where if you bought one, you got the royalty rights to 0.00033% royalties to one of her biggest songs. So why can she do that? Because when the streaming service plays her song, the smart contract kicks off and it says, oh, you're a Rihanna fan, you have the token in your wallet. I owe you this fraction of a cent for that one stream. Think about how that opens up other types of investment opportunities. So we think it's going to be really exciting to see how this space evolves. And when you combine AI and the smart contract, it's going to be hugely powerful.
So, will 2026 then end up being some sort of an inflection year as far as tokenization is concerned?
So my view is yes. I mean, we've been in this journey for a while at Franklin Templeton, but I can tell you, number one, having come from this crypto conference, talking to a lot of the crypto exchanges, they're looking to bring traditional products on to be able to deliver to their clients. So their clients are looking to say, I want to diversify from crypto. I'd like a tokenized ETF. So you have demand on that side. And then I have to tell you, the TradFi, traditional finance firms, are now starting to talk. Everybody's nervous because there's a lot of probably bad investments in crypto, but there's a lot of really good ones. And so their clients are saying, hey, I want exposure to that. And so they're now trying to understand, what does it take to build the wallet infrastructure? You have to have a wallet. Again, it's just a programming language to hold that token. And so they're now talking, and we built those capabilities when we built our tokenized money market fund, because it didn't exist in the market, about trying to add it to their environment. So this is where I think, and I have to tell you, there were more. I've been attending crypto conferences for the last 5 years. This one had the most traditional financial people that were in them. A lot of market makers are starting to get in as people talk about democratizing alternatives. I always say to people, that's not a technology problem. That's a market maker issue. You need liquidity. Well, they're now starting to be interested in moving into that space. So that's why it feels like 2026 is going to be the convergence of these two worlds, the beginning of the convergence.
The beginning of the convergence of these two worlds. But 2026, the return of IPOs in the U.S. and possibly AI IPOs?
Yeah, so here's what I'd say about the IPO. So I think that the good news is the current administration is really focused, and Chairman Atkins at the SEC, it is on his agenda. He wants to make it easier. There's a huge cost from trying to go IPO. I do think that one of the issues is some of the private equity firms are holding the asset at a mark. They'd have to mark it down if it goes into the public markets, and there's a resistance to doing that. So I think that the bid-ask spread is probably not allowing a trade to happen, but you're starting to see that warm up. So I think we'll see more.
But, on the question of asset bubbles and whether we are in the midst of one as far as AI is concerned, and I know everyone's talking about the tailwinds that the AI infrastructure build-out is providing to specifically the U.S. economy, but from an asset point of view, what's the take? Are we in a bubble territory or not yet?
So here's what I'd say. We talk a lot about market concentration. That's why I'm actually a big believer that the most important decision people make about their portfolio is diversification. Because one thing we've learned, there's just another surprise that's coming along. Diversify by geography, diversify by sector, diversify by asset class. But here's what I'd say about the AI. So the Mag 7, as we look at them today, and you say, they're so concentrated, and you compare it, a lot of people compare it to the dot-com boom. The reality is, the current Mag 7 have earned their right to those multiples, right? They've shown those types of earnings growth. I think in the 5-year period, it's been something like 445%. So, can they continue to sustain that growth? That's a question that, we'll sort of see. But certainly, they've earned it. What I think is really exciting is that within sectors, the pace of this AI, just technological advantages, is so fast that the companies that figure out how to leverage it in their environment, both to reduce their costs as well as to figure out how to have it generate revenue, are going to leave behind their peers. Because if you don't get it right early, I think you're going to not be able to catch up. That's just my instinct on this. And so I don't think any of this, there's been huge productivity gains in the U.S. and companies. I don't think any of that's from AI. I think everybody's sort of figuring it out. We're kind of doing experiments and cost cutting, or maybe our investment teams have built a platform and they're doing some really interesting things, our distribution teams, but they're not yet really translating into revenue, but it will happen soon.
Well, as an asset manager today, and we'll be talking about global risks and geopolitical and geoeconomic confrontation continue to be some of the top risks that CEOs are watching out for through 2026. What would you put on that dashboard?
Well, this is again where I say volatility and risks is what makes active management really important, right? And so this is where I'd say our job is to educate our clients on, as you can see, you take big trends. U.S. and China are probably going to always be frenemies, right? They're going to be friends and enemies. There's going to be areas where we have to work together. The U.S. needs China and China needs the U.S. But on the other hand, if you're a U.S. pension fund, you're probably not going to be able to invest in Chinese technology. There's probably going to be real bifurcation there. If you're a European company, a Middle East company, or Asian company, you're going to want to take advantage of that investment. So our job, again, with clients in 160 countries, is to be able to have research on the ground where we're finding those opportunities and constructing portfolios that our clients want to invest in, and to guide them on what we think of, hey, if U.S. and China have tension, that means there's going to be shifting in supply chains. If there's shifting in supply chains, let's figure out which countries are going to be the beneficiaries and which sectors are going to be the beneficiaries in those countries. So our job is to guide our clients through these geopolitical volatility, and most importantly, to remind them diversification is really important.
So besides the convergence of crypto with traditional finance, which you expect to be a big trend through 2026, what are going to be some of the other trends that you believe will shape the way the markets move?
Well, for sure, the private markets and bringing that to the wealth channel, right? I mean, this has been an issue, which is, if you think about it, I described my grandfather started Franklin Templeton, right? So I'm third generation. When my grandfather got into this business, the average person didn't have access to the equity markets, right? So you were left out of the growth of the equity markets. We have that same issue today. Do you know 87% of the companies in the U.S. that earn $100 million or more in revenue are private? And so if you can't invest in private markets, you're left out of 87%. That's not really fair. But they're illiquid. So I think what you're going to start to see is creativity around the vehicles where we can responsibly bring private markets to the average investor. And there's a lot of different ways that I think that will happen. And by the way, that's a global trend. I mean, you really hear this about private. It comes, honestly, it stems from, I think, the GFC where banks aren't lending the way they used to lend because capital rules have changed. Companies don't want to go public as much, and there's plenty of money to stay private. And so that's not going to reverse. And so being able to bring those investments to the average person, I think, is one big trend. The second is personalization. Technology is enabling personalization of portfolios. I think that people's portfolio is not going to be just, this is my investment portfolio. It's going to be like, here are my goals. Manage these portfolios based on my goals. And the technology is going to enable that kind of personalization.
Well, I want to talk to you about your time in Hyderabad. What are some of your memories from that time?
Oh my gosh, it was a great time. It was a great time for the family. My kids went to a school there and dressed up in their uniform every morning and took the bus. And I laughed because my youngest was 5 years old, and he'd say they all learned that the bus driver never waited till you got in your seat. He just took off. So the key was when you got on the bus, you had to just grab hold and
whatever. Yes,
whatever was there. It was an amazing family time, and we loved it. And we took the time to go each weekend to go. We went to Kerala, and we, of course, went to Agra and Goa. So we just go traveling all over and experiencing different parts of India. It was a lot of fun.
So what are you most excited about for Franklin Templeton in 2026 and beyond?
So I'm excited. We've done in the last 5 years, I think probably 11 acquisitions. It's been all about positioning the company with the capabilities. And so today, we're a top 10 alternatives manager. A lot of people don't realize that. We have $270 billion in alternatives. We have $100 billion in private credit. We have about, I think it's probably 70, almost $80 billion in secondaries, and about $80 billion in real estate and some venture. And so having that breadth of capabilities, I actually think that traditional managers who haven't gone on the journey of acquiring alternative managers are not going to be able to do it. They've become too expensive. And so really proud of what we put together. That gives us, I describe it as like our clients are like a chef, and they walk into our kitchen, and it's the best stock kitchen out there. And you can build whatever types of capabilities you want. So that makes me really excited. The work that we're doing in tokenization, which I genuinely believe when you combine that with AI, is going to be hugely disruptive. We have a core team of, I think it's, there's probably over 60 people that are on just working on digital assets. And, I think that's going to become more and more relevant. Similar to, honestly, the journey that ETFs kind of brought in, how it changed sort of the mutual fund, SMAs, separately managed account, those types of things. And so this is another vehicle, and it's going to open up really interesting investment opportunities. And most importantly, it's going to actually create financial inclusion. So when we launched our money market fund, the SEC required us to run our old record-keeping system and our blockchain system. The old record-keeping system, we ran about 50,000 transactions, and it was about $1.50 a transaction. The entire cost of those 50,000 transactions on-chain was $1.13. So you can invest in our Benji money market fund with $20. Our traditional money market fund, you have to have $500. And we can actually reduce that number. And it's simply because this technology is so efficient in how it operates. And so that gets me excited, because I actually think in India, tokenization, again, people get nervous by the crypto word, but tokenization in a country like India is going to be really important to be able to reach out in all the secondary cities and villages and things, because it's going to enable financial inclusion.
You talked about financial inclusion. Let's talk about inclusion in general. Are we likely to see more women coming into this world? Or?
I sure hope so. Isn't it a great business to be in? It's a great industry. And so, to me, it's a natural one for women. And I think sometimes we don't do a great job of describing what this business is. I tell people that I asked my kids, are any of you going to join me in this industry? And my daughter says, no, Mom, I want to do something that helps people. And I'm like, are you kidding me? And I thought, I must be terrible at how I describe this. This is a business that helps people. And so I think if we can resonate more with women about this is a great business to help people, we can attract more, number one. Number two, girls fall out of STEM in high school. We've got to figure out how to get them engaged early, and then in college, getting them in internship programs, showing them what a great business this is.
Jenny, always a pleasure. Thank you so much for joining us here in Davos. We look forward to seeing you in India, and I hope we see more of you in 2026.
You absolutely will.
Thanks very much for joining us. Well, the conversations will continue here from our live coverage in our live studio in Davos 2026. We're back with you in just a short moment.